All right, ladies and gentlemen, welcome back. We're going to be going over the swing trades today, February 6th, 2019. I've already covered my day trades for the day. They didn't go too well. I'm down $82 in the paper trading account. Yesterday I was up roughly $30 or so, not too much at the end of the day on my swing trades. And so today, as you guys know, if you watch my two episodes back on my swing trades, I have been trading Nvidia and Cron and USO as of late, and I still have positions in all of those, and we are here to review those right now. So let's get into the trades. We'll start out with the Cron trade. So as you can see, this is Cron. This is a daily time frame. Um, it ran up real hard. Sorry guys, get the best view for you guys here. So it's made this big push up here, and over the weekend we were talking about this move right here, and I ended up getting in right here. See, I talked about some people in a group, and some big short sellers were shorting right here. And this is the other thing. This is why you don't want to follow people, but you want to know what they're doing, because I got this day when I heard people were shorting here and it moved down. I didn't chase it and I didn't get in with them. I watched it, and the next day I wasn't even watching it, and it came all the way back up, and the guy who I follow in a group, he had said that it was squeezing up and he was cutting his loss. He was getting out. He was getting squeezed out. He was one of the buyers having to buy back his shares because it had pushed up so high because of that short squeeze and that buy up from people who just unfortunately made the wrong move buying right there. So they stopped out, and that's where I entered up here, more around this area on the close. That was my entry. So let's go in, and if we go look closer on my entry on the 5 day. So this is the area where the previous day closed, and when we say previous day close, as you can see, I've changed my charts here. So this is my normal chart, but just to make things more clear, I'm using this chart. But the previous day closed is the price where it closed on the last day. So this is aftermarket, pre-market. This is the closing price of yesterday, of Friday, and or whatever day that was. And this is that closing price extended over here. And if the stock's going to go down, if it's trending down like you want it to stay below yesterday's close price. So that's why I shorted right there. That was my theory there. So I'm holding my short down, and I covered, and I actually, in this morning, if you can see, this morning it opened up and squeezed up real hard, and I was anticipating that happening, and I was watching it, and I actually wanted to sell here, but I mean, sorry, I actually want to sell, yes, which would mean I would be adding to my short position, going in bigger share size, doubling down for this move, which I didn't do, but I should have, because that would have been a massive gain right here. So, but anyhow, I held and I covered one contract right here, and I actually added another one um, right in here. But this contract is more out of the money. It's less risky, so I actually I took risk off, even though I still added another contract. So I still have one riding, added another one, and we're gonna let that. And I wanted to cover, but like I said, I'm under the PDT rule, and I'm not that worried about it, so I'm not covering as of yet. And I'm gonna anticipate a squeeze tomorrow, and we'll play it out of the open and out of the pre-market tomorrow from here. All right, that's that for Cron. So, and yeah, for Cron, my stop loss is still the same stop loss that I had set earlier with this. I put a new trend line coming from these two highs going down. If it starts to, and I can extend this drawing to the right, and if it starts to break over this, that's a definite stop out, guys. So tomorrow that line will be somewhere in this area here. Sorry, somewhere in this area here tomorrow. Now the other thing about this trade is, oftentimes you will get a oftentimes when you have a big move like this, people use Fibonacci. Now, Fibonacci is something that occurs in nature. If you don't know who Fibonacci is, look him up. He's a man who found a mathematical equation that is found naturally occurring in nature, and he created his theory and his formula for this equation using the reproduction of rabbits. And this theory can also can be seen in nature and other things such as the shells of snails and other just look it up. It's some crazy thing that so basically why it applies to stocks is people like these certain levels and they'll buy and sell and they'll set their computer programs to buy and sell on these levels. That's why I think it's relevant. So the way it works is if you have a huge move up like this, you use the Fibonacci and you start at the start of the move and then you end at the end of the move. And you can all these three levels all of these levels you can look to, but I prefer these three levels. And what we can see here, and I didn't actually. Hold on, let me remove that drawing and redo it because I didn't get exactly where I wanted. Now all of these, so that's I got the move there. So I prefer these three levels. Now the one reason I am a bit, I probably should have covered down here is because it was not only bouncing off this line here, which I had marked off for the tops of these candles, which we can see big runners. If they're going to continue running, they'll usually bounce off the previous high of the last big run and then continue. So that's why, and also this 32% level is one of the most reliable levels to look for if something's going to bounce and continue running. Is now they also will move to the 50% and 61% before they bounce as well. And this hasn't really fully bounced. Yes, it did bounce off at this level. Sorry guys, trying to get a better view here. So it did bounce off this blue line, but it can still continue past it further. But I did cover one contract here, and that's part of the reason why. Now, it could blow through that level tomorrow. We'll see. All right. So that covers that trade. Now we can go to the Nvidia trade. Now, like I said, I've been all right, guys. Bear with me here just 1 second while I. Alright guys, so this is NVIDIA as you can see here, and if we zoom in, this is the daily time frame, and if we zoom in here, we can see this is where I've been talking about where I originally got along with my contracts in here, and I've been selling at the tops on the way up and adding more or less on the dips, or not so much, but also adding and selling on the way up. And I had said before that my profit target was going to be up at the 160s in a previous video, which is actually not true. Sorry guys, just do this real quick. So I said it was up in the 160s. Now I realized that a lot of these times when they gap and they come and they if they do come back, they'll fill the gap like I said, and the gap would have been from that close really to this price. And I realized that after the fact, so I moved my profit target back down here, and once it and I added a contract in here, and once it hit this price yesterday, I realized it closed the gap. And a lot of times after they close the gap, they'll sell back off. So I sold my contract right here, and I actually added. And after I sold my contract long and locked in profits on the day, it sold off tremendously, came back up, and I waited for it to test this price again. After it tested again and failed, I shorted the stock and I added on a short position. So I'm currently holding shares short on this stock. So guys, if we go in here and take a closer look on these time frames here and go into the 5-day, 5-minute chart, I added my contract, like I said, talking about yesterday, I added my contract in here near the VWAP, and I held down through here, and I talked about how I could tell it had support, and it was showing divergence, which means it was moving, it was holding its own while the market was moving down. I knew that I felt good about keeping this, holding those contracts, so I held through all this, and I said I was going to sell it if it didn't make a big move. Sure enough, it pushed up huge this morning, and what I did was I saw this push up here to 155, and I saw it was getting close to this gap fill, and sometimes they won't technically completely fill the gap all the way. So once it got close here and showed, and I literally sold at the very top. I sold right here. Sorry. So I sold at the very top of this candle. So I locked in profits on that, and as you see, that was an awesome move because it immediately dropped down. And when a stock is moving up like this straight up, the volatility is so high that the option contract will gain value exponentially because it's more danger that the options writer, whoever is on the other side of the contract, has to incur. So if you don't know about options, I can't teach you much about them because it's a lot to learn. But that was a really good sell, and even though it did come back up, I was thinking about shorting it here, but if we go into the 1 minute, we can see this is on the 1 minute time frame. The fast time was the time. The past was a 5 minute. This is the 1 minute. We can see here that it sold off, and I was thinking I should have gone short here, and I watched it bounce here, and I was thinking about going short here. I was watching other things, but I didn't. I said, you know what, let me just stop and wait. So I waited, and later on in the day, I did my routine, and I came back after lunch. I went for a run, and I came back, and I saw that the stock was doing this action where it was curling up and setting in a higher low after each one. Now, a lot of times when something goes like this and keeps curling like that, it means it'll keep running. But sometimes it'll dump like this. And what I did was I looked back and I thought I remember this from previous days. If we go to and I gotta hurry up, guys, and I'm not gonna be able to get my USO trade in. But if we go back to previous days, we can see that when it curled up like this towards the end of the day after a big run, 1, 2, 3, on the third, it sold off. On the third, it sold off. 1, 2, and it sold off after that. And it did the same thing in here, but it never really ran. And so that's why I felt safe about I took a short position right here on this trade. So I'm still holding shares short. So I'm happy about that. I don't like being short in two stocks in the market at the same time because the problem with that is you're exposing yourself to too much risk. Because if the market runs tomorrow and I'm short two stocks, it's likely I'll get squeezed out. That being said, I still have contracts long in USO and they're not moving, so I'm getting ready to cut those tomorrow pretty much no matter what they do. But